Hey everybody, welcome back to our weekly podcast. You know who I am. My name is Patrick Tan, General Counsel for ChatArgos. And with me always, as usual, every week is Jonathan Reiter, CEO and Chief Data Scientist. You know who we are. We were the guys who outed Binance's $1.4 billion BUSD under collateralization. So no introduction required.
You got to find something with more dollars, so you change the intro. But anyway.
There we go. So. This week, what we're going to talk about, okay, quiet ish, kind of not quiet, not noisy week. We had Bittrex. I'm going to talk a bit about that. Talk a little bit about Huobi's stUSDT stuff. What's going on over there? Talk a little bit about Binance and its Binance US, actually, to be precise, and some issues there with producing your accounts. Interesting fact, they can't, and they can't because they really can't. So we'll talk a little bit about that in a short while. And finally, we'll talk a little bit about PayPal's stablecoin. They've tossed their hand into the ring, run that out of that Paxos stablecoin printing machine, and let's see what we think about that. So we're going to jump straight into it. John, tell us about Bittrex. What's going on?
So Bittrex finally settled the SEC charges. So they were charged. Bittrex, both the onshore and offshore branches of Bittrex Global, which I think is a German company. Maybe it's Swiss, I don't remember. And the Bittrex CEO were all charged with unregistered securities exchange, clearing agency without a license, all that kind of stuff. So they settled for a combination of disgorgement and fines and penalties, whatever.
Disgorgement.
In that, well, in the many tens of millions of dollars, which is probably less than the fees that were collected. It's a general weirdness here.
Yeah.
But sort of a general acceptance that this stuff falls under whatever securities rules. So it will be, as we've opined many, many times, harder and harder for people to hold out and claim that they're special, and all these previous people
that's not true.
fines.
You're special. You are,
Yeah. You end up having to really argue that you are special in some way, because if previously people have sort of admitted guilt and paid fines, and that's happened repeatedly.
Maybe if enough people told you that you were special, you might not do so many of these things.
Look, there's problems in that space. We can talk about that at a higher level regarding sort of tech attitudes towards rules. I mean, this is a bit off the crypto subject, but if you look at the way the Airbnb and Uber situations went, I think people don't appreciate the difference between the guys that enforce the hotel regulations and the guys that enforce the financial services regulations.
I think people just need to give each other more hugs.
Okay. Anyway, that's not the theme here of this business. So Bittrex has come to a settlement on that. Whether there will be criminal charges for, I guess, would be money laundering type stuff and whatnot.
Correct.
Remains to be seen. But there's now, Bittrex was at one time a pretty large exchange.
Oh, yeah.
They were the original partner, actually, for the True Dollar in the early days, right? That's the first place it was listed.
Yep.
They were a bigger exchange than Coinbase for quite a while.
Oh, yeah.
Because Coinbase was very, very narrow in what
Correct.
they were trading. They've become less narrow
And,
lately.
I mean, tell us what disgorgement means, because for those of you out there who aren't familiar with the term, there's a couple of settlements you can enter into with any number of federal regulatory agencies. Disgorgement is not quite without admission of guilt.
Yeah, okay. So what happens...
Or wrongdoing.
What happens in most of the world, if you do something you're not supposed to, you have to give back whatever money you made on that.
Correct.
And that's not a fine. That's the disgorgement of profits. So if you made $20 million, whatever they make, you give back your $20 million. And then they fine you whatever other penalties for things. Usually, you only agree to give up stuff that they can prove. Right.
Yep.
So if you made $1 billion and they only prove that 20 million of it was wrong, your disgorgement is often 20 million, and there's triple damages, quadruple damages, single damages, whatever on top of that. This is the reason a lot of the time you'll see some bank embroiled in some scandal with a tremendous amount, and the fine isn't quite so large. It's because the government essentially never can find 100% or even cares to make the effort to find 100% of the violations. They're happy to slap you. And what happens, this is also part of the settlement here, is they've agreed to not violate these laws going forward. Now that, at first blush, always sounds stupid, because of course you have to follow all of the laws. That's what the laws are. What they really mean is not that you have to follow the laws now, it's that the next time the penalties will be certainly criminal and significantly more severe.
Yeah.
So this is their way of kind of stopping you from doing this again by threatening to come after you. We've had this theme many times.
Yep.
A lot of the regulatory system in the West, very much the Anglo-American branch of things, is to get people to not do things because of the fear of how much trouble they'll get in when they get caught. And if you only expect to catch 5% of people, as long as you're expecting 20 times as bad behavior as they think is due to them, 20 times the penalty, maybe on expectation that reduces people from behaving badly more efficiently than really trying to catch 100% of the perpetrators. So Bittrex looks like a pretty standard financial services settlement for somebody that did something bad. Can't say super severe or not because they could still be further stuff coming. We don't know.
Correct.
The book isn't completely closed on that one yet. So there you go.
Well, okay. Let's talk a little bit about Huobi, and they haven't made the news yet. It's a pretty live topic on crypto Twitter, and it's about we've tracked it. We're not the only ones, but we've tracked it. We've tracked USDT coming out of Huobi, heading into stUSDT, and then stUSDT, which is supposed to be in buying real world assets.
Okay, let's step back just a little bit. So Huobi's seen a dramatic drop over the last 2 quarters, really, in the amount of assets on the platform, in particular in the amount of stablecoins on the platform. They've also seen outflows in Bitcoin and ETH and the rest of it. Okay. I mean, lots of platforms have seen outflows. Essentially, everybody but Binance has seen outflows. In dollar terms, depending on where you measure against, even Binance may have, because a lot of tokens have dropped.
The only thing I would caveat that with is that when Binance was under heat and people were looking for places to trade, Huobi did experience some of the benefit of that, because one of the places that people went to other than OKX, KuCoin, was Huobi. So they went back. They said, hey, this. I mean, like it or not, it's been around for a while.
He's 10 years old, right?
Yeah, I mean, it's not new. So some people did go back there, and that actually saw a spike in volume at Huobi for a while.
Yeah, but I mean, overall, look, since the FTX stuff, everything's gone down.
Yeah. But I guess, I mean, on a month-to-month basis, there was a slight increase. But the last couple of months, we've seen a whole bunch of stable coins.
Yeah, so dollars being pulled off, and Huobi has moved a lot of their dollar holdings, because stablecoins in some sense are semi-interchangeable, into staked USDT on Tron, which is not really a stablecoin in the traditional sense. So we normally think of stablecoins as either being stuffed back by dollars in a bank account, Tether, USDC, whatever, or these sort of algo stables, so stuff like Maker, whatever, myriad protocols that try to do those
USDD.
USDD, sure. So these are things where nobody's pretending there's a big pile of dollars over here. I mean, Maker has some whatever dollars, but in general, it's not a pile of things versus one-to-one tokens coming out the other side. It's some other nebulous collection of crypto stuff and then smart contracts around it. Today, we're not talking about whether or not those processes work. Yep. We're just talking about mechanically what's going on here. Now, staked USDT, its stated policy is to take USDT and then stake them, right, into the purchases of real-world assets so that you're holding stuff that is, whatever, diversified from what the underlying things under USDT are. So this is maybe not the most carefully described product even by crypto standards, but, if you're acquiring real-world assets, you'd expect that the stablecoins would get burned or at least get put in some designated wallet that was kind of segregated and somebody else took dollars out of there, whatever, used it to purchase the off-chain stuff. And Huobi's decided, for whatever reason, to move a lot of its dollars into staked USDT. So it's worth noting in the for whatever reason department that Huobi, Tron, and staked USDT all seem to be part of the Justin Sun complex of protocols and whatnot. As is much of the stuff on Tron, none of this is in dispute. None of this is really new information. Fine. However, Huobi's not taken in staked USDT because staked USDT is a new protocol. People are giving Huobi USDT, USDC, BUSD, whatever. Regular stablecoins, USDD. Huobi has been sending them into the USDT staked USDT on Tron, and then getting back staked USDT, which it claims in what it's providing as something that looks like reserve reports, calling these things proof of reserves. And let's put a pin in this one, come back to this in a little bit. These things are not proof of reserve reports in the traditional sense at all. And then staked USDT is just pumping the USDT it got out somewhere else into a different DeFi protocol on Tron.
Which is called JustLend.
Which is called JustLend, which is, of course, part of the Justin Sun, whatever complex, using SunSwap and the rest of it. None of this looks like what these things are supposed to be doing. If I deposit my Tether on Huobi, I expect Huobi to have a bunch of Tether that I gave it and then let me trade with them, withdraw them, whatever.
Instead, they filled it with IOUs, kind of, because they put in staked USDT. This is like if you well, my banking is not a good example because banking is literally that. But
no, banking's not that at all. Anyway. Okay.
well, I mean, the it's because it's fractional reserve. It's I mean, you can get the money when you need it, but
Okay.
I mean, at least for the representation, it's not like they put all the cash there and they don't touch it. You know what I mean? Like because of the fractional reserve banking. I mean, like.
Well, okay,
yeah.
no, fine. Let's drill into that. Let's drill into that one. Actually, that's an interesting comparison to think about the way this works. So what's happening here is I'm giving Huobi my USDT, and it's depositing them somewhere else and getting a receipt for those USDT.
Yes.
And then what that thing says it's going to do is go purchase bonds and real-world assets of whatever sort. That does look kind of like a bank.
It does.
And the important thing about the assets that banks buy is that it's fractional reserve stuff, ignore, right? If they buy a bunch of government bonds, they buy a bunch of mortgages and the rest of it, all of those things are pledgeable in very liquid securities markets, generally government supervised, government liquidity backstop securities markets. So if my dollars go into a government bond that my bank owns and the bank needs dollars to pay me back, the government will lend it dollars against that bond.
Yes.
So the liquidity exists there. What's happening here is instead of going into that real world asset space, in which that discussion we could have, they're going into a on-chain DeFi lending protocol, and they're kind of lying about what they're doing with the money. So they say they're going to do the first thing, they're doing the second thing, and once these things are in JustLend, there's no good way to get dollar liquidity out of that other than unwinding all the loans if JustLend works. Right? If I wanted to participate in JustLend as a USDT holder on whatever blockchain,
I just do that.
I would go do that.
Yeah,
I don't need Huobi doing that for me.
Correct.
We can talk about whether or not Coinbase and Kraken for U.S. retail investors are providing appropriately supervised securities services for their staking and yield earning. What we're talking about here is people depositing Tether on Huobi, on the Tron network. These people are not expecting U.S. retail securities.
They're not expecting any of this stuff.
Yeah, no protections. You just stake it yourself.
When you put Tether on an exchange to go and trade crypto, this is not what you expect.
Yeah, well, and you're not. This is not like a market of people where you kind of want a bunch of supervision. And this is very much the unsupervised frontier of things.
And mind you, from what we know, is that when Justin Sun is said to have purchased Huobi, there was $400 million worth of client deposits at the time. We don't know if all or some or most of that stuff is...
Well, there's very little native stable left. Yeah. All the stuff has been pumped out into these other protocols. Now, look, the money may still be there and recallable. It may not be, whatever. But it's interesting that the users of USDT on Huobi are clearly capable of participating in JustLend or MakerDAO or whatever Aave, major borrowing and lending protocols type stuff if they want to. And they do not need the exchange to do it for them, nor is the exchange offering that service. The exchange is just taking your dollars and doing something else with them. That is weird. Whether or not that turns out to be a real problem remains to be seen.
We're going to find out.
But it does mean that likely at this point, the sort of solvency and survivability of Huobi is now firmly attached to the rest of the Justin Sun complex. While you may have thought before morally these things were kind of all attached because it's all whatever group of people are around Justin Sun, now very much on chain, they've tethered JustLend to, good joke, right? JustLend to the exchange. And JustLend is, of course, attached to SunSwap and the rest of the Tron action, USDD. We will see.
We'll see.
We'll see if the TRX price collapses, a lot of these things are going to not be okay. Right, because now Huobi's dollars are dependent on the TRX price being high enough for JustLend to remain solvent.
That sounds vaguely familiar to another protocol that had to rely on a token.
Yes, a token that was primarily owned by a guy who ended up using that token to get a bunch of loans. Yeah, no, absolutely. There are, I would say, eerie similarities, except it's not eerie at all. This is the most efficient way to get the money out.
Well, I mean, they all coincidentally come from East Asia, not that should matter.
Well, SBF didn't come from East Asia.
Well, that's different, right? I mean, but sounds like Luna as well.
Yes. Yes. The most efficient thing to do, apparently, is to make up a token, convince a bunch of people some other thing you have is basically $1, and then borrow that thing against your token and sell it for dollars. That
feels like what's going on right now, actually, to be honest.
Yeah, that's what keeps going on.
Seems to be I'm not saying it's going to seem to be an East Asian thing, but it seems like 2 out of the last 3 of these things have come from that region, so...
I mean... It's definitely the thing that's happening.
Have at it. Finally, not finally. Penultimate. Binance US. Accounting problems much.
This is fantastic. So Binance was asked to provide a bunch of financial disclosures to the U.S. government, but the Binance U.S. entity as part of their ongoing
And
litigation.
the response was, we cannot provide that which does not exist.
Well, they asked for more time, and they said how long they would need. And then when it got to that deadline, they said we need more time again. We still can't do it. That's not great. Courts don't like that.
Yeah.
And it remains unclear if at this point, given how many people have left Binance since this began, if the people who work for Binance US can even do this.
Yeah.
Right?
They might not have access to those documents. They may never have had access to those documents. And I'm guessing that the former employees of Binance who have received advice from their legal counsel, which is not to talk to the current entity such as it is, where you're gonna, so this is literally conjuring, because you have to conjure up the accounts from stuff that you A, don't have access to, B, never had access to, and C, now are looking for something that you never had access to or may have never existed.
Yeah, so, I can give some examples. I've experienced something that is vaguely similar to this in regular finance. So in some parts of the world with highly restricted financial systems, countries with restricted currencies and big restrictions on foreign access and stuff. Oftentimes the offshore parts of a large global bank can't see the onshore trading records, books, whatever. You do get higher level P&L statements and whatever reporting, but I can't see the trades. I can't see them. And I've had questions before where somebody, compliance or whatever, accounting, product control, somebody wants to see where certain trades are. And we got to email this dude in whatever, in Korea, Brazil, those kinds of places that have restricted currencies. So it is not impossible that if that office didn't have any employees in it, this is the part I never experienced, that you just can't answer the questions, right? My trade is against whatever entity here, and I can't tell. Similarly, if Binance US was really operating as a very thin conduit without much financial reporting infrastructure of its own, and the people have changed over, it's mechanically possible they simply can't answer these questions.
No, it's absolutely possible. If you look at some of the statements of the ex-CEO who kind of broke the silence not too long ago, spoke, I think, to either the New York Times or Wall Street Journal.
This is Brooks.
Yes. So when she came out to say that...
Coley.
Yeah.
Coley.
Yeah, correct. So when she came out to say that, she didn't... When there was... Remember that 400 million that just kind of went out? She didn't even know what was going on. So my guess is that nobody, at least on the U.S. side, had a proper oversight of the finances. So how are you going to present accounts?
No, unbelievable.
Yeah.
Depending on what your job was, you may or may not be able to tell the government, I can't get this information. If your job was CFO of the company, CEO of the company, money laundering reporting officer, whatever, you tell them that, you're admitting to a crime. If you're the guy who was a strategy officer, marketing officer, whatever, I'm the COO, maybe depending a little bit on the
chief strategy officer. Compliance, a bit tougher.
Given they, at a minimum, have money services business registration type stuff, there are requirements for some people to have some idea what's going on with the money. And telling the prosecutors, sorry, we don't have any records, is unlikely to go well for you if you can't help them get the records from somewhere else. Again, it's a fear-based system. If you say that to them and you can't produce the records, the only way to prevent this from happening again at that point for the government, assuming they just can't get the information, is to be really hard on the person who made that mistake. Otherwise, they have no hope of anybody ever.
So when we say really hard, we're talking about maybe prison sentences?
I would... Look, if you're the money laundering reporting officer or the responsible person for a money services business, and you say plainly, I don't have access to any of the records for many billions of dollars of tens of billions, whatever, transactions.
I would like to sit in on that deposition.
If that doesn't rise to the level of sort of the criminal version of some of this stuff, it's hard to imagine what would. Oh no, you have to break $1 trillion. This it's a bit. The Binance US thing is getting a bit ridiculous. If they just don't have any records, it probably is not the people who are failing to produce these records' fault.
Yeah.
At least maybe not in large part in some moral sense, but they're almost certainly going to end up getting in trouble for it because somebody has to.
So I guess one way to look out for that would be if we saw another fresh wave of resignations.
The current staff aren't the ones who are going to get in trouble. The recent current staff. Yeah.
No. Even the current staff, they'd be like, I'm not sticking around for this.
Yeah. Maybe it could be amusing. You're just sitting there forwarding emails back and forth between your ex-colleagues' Proton Mail accounts and DOJ.gov account. I guess it's justice.gov accounts, but there you go. I don't know.
Okay, finally, PayPal stablecoin. What's going on over there? There have been how many transactions?
No, there's not a tremendous amount going on yet on the PayPal stablecoin. Although there were amusingly a lot of fake PayPal stablecoins launched
That was
within
hilarious.
moments.
That was fantastic.
Within moments, that was pretty good. And there was even volume on a PDUSD that wasn't even PayPal related that had previously existed that had a Uniswap pool, and that even did some business. These are not the most with it people in the world. Yeah, PayPal, a large, well-known payment processor brand, has a Paxos branded stablecoin coming out. The contract has a lot more features than the simpler, older Paxos stablecoins. In broad strokes, nothing dramatically more controlled. I mean, it's all freezable, burnable, seizable, whatever, all the usual regulated stuff. None of that is new or surprising in any way. It's the PayPal name and PayPal's promise to allow you to use these things to make payments on places that accept PayPal. Okay, interesting. And the Fed came out the next day with guidance that approximately said banking things like that isn't okay.
Yep.
And banks that do that will have trouble.
Yes.
Essentially, if they're not whitelisted systems, things where you can control who can receive the money, they're not going to fly. Right? So we'll see how that plays out. They've been saying this more quietly for quite a while, and I don't even know that this most recent announcement would have gotten the coverage that it did, or as widely read as it was, had it not come. I don't know, our time it was the next day. It might have even been 8 a.m., 9 p.m., whatever, U.S. time. And the PayPal announcement, maybe a stillborn product. I don't know. We'll see what happens there.
We'll find out, yeah.
I mean, Paxos is operating under an NYDFS regime that at a high level does not look consistent with the Fed's requirements of U.S. banks.
Yeah.
Federally regulated U.S. banks.
Yes, that's correct.
Whether you're going to end up, we discussed this, last week, 2 weeks ago, with some kind of state-limited banking access thing that tries to get around a bunch of these rules by being too small to have to follow the Fed's rules. I mean, PayPal has licenses all over the world. Lots of people were talking about how, now PayPal can offer dollars to people in various parts of the world. People I know, finance, who work in, I'll say, large, well-known remittance-type brands around the world, particularly this region, laughed at the idea that they could provide dollar banking-like services to people in restricted currency countries and retain their licenses. PayPal is a huge listed company, so if they decide to provide dollar bank accounts to people in India, Indonesia, Vietnam, whatever, not only are the regulators there going to get pissed off, but because the regulators there are going to get pissed off, their U.S. shareholders are going to sue the pants off them. Right? This is one of the issues with being that kind of a business. Right? It's not going to be a fantastic scene. So.
Right, and on that note, that's it for this week. If you have any comments or questions, please put them down in the comment section below. Otherwise, hit that like and subscribe button. We love it when you do it. Thank you for taking the time out of your busy schedules to watch the show. We're looking forward to seeing you again next week, and we'll see what we have for you then. Until then, bye-bye.